Welcome to 4 Quarter Lives, a podcast exploring the profound impact of longer, healthier, and more engaged lives, not only for ourselves and our couples, but also for companies and countries. I'm Avivah Wittenberg-Cox, and on this week's 4 Quarter Lives, I talk with fellow Canadian Alan MacIntosh, founding partner of AgeTech Capital. Alan's an influential figure at the intersection of venture capital, technology, and age-related innovation. He has a remarkable career, always at the forefront of each era's major innovative disruptions, from oil fields and telecoms to AI. Now he's pioneering major investments in the burgeoning field of age tech. In this episode, we'll travel through Alan's career journey through multiple waves of technological innovation and how a focus on health and then his own mother's experience of Alzheimer's connected to push him towards his current focus on age tech. We'll explore the massive opportunities this demographic shift presents, the startups addressing critical needs in caregiving, independent living, preventative health, and financial solutions, and Alan's collaboration with AARP to drive systemic innovation in the longevity economy with a new platform. Let's dive in. So Alan MacIntosh, welcome to 4 Quarter Lives. Delighted to have you.
Thank you, Avivah. It's great to be speaking with you today.
So you have a long and diverse journey in venture capital, from the internet to AI and now age tech. Can you share a little bit what all the different stages were and how you ended up on this focus on aging and demography? And how do you connect the dots between all of those different interests?
Indeed, yeah. Well, let's start. The last 2/3 of my career have been all about venture capital and writing the different waves from the early days of the internet to mobile communications to AI, and sort of weaving them together now. And what's our new ambition and fund is around age tech. But prior to that, I started as an oil field engineer, having grown up in Aberdeen where they discovered North Sea oil. And it was my sort of passport out of the country. Worked on the rigs during my schooling in the North Sea and the Gulf of Mexico, and then was sent by Schlumberger to Italy and West Africa. And it was just a fantastic, eye-opening experience. Ended up meeting my wife in West Africa, which was fantastic. In Togo, in Lomé. Mano is Canadian, and she was last year of university teaching there. So it was quite a fortuitous thing and quite a story to reflect on. But that after several years, I took a sabbatical from Schlumberger. I wanted to sort of open my horizons, went to INSEAD, did an MBA. That was just incredibly motivating on a number of fronts, particularly to appreciate the dynamics of multidisciplinary work, which is a big focus teamwork at INSEAD, just learning other disciplines of business. And the particular thing that then led me into sort of technology was just understanding the innovation cycle of technology. My summer I actually went and looked at Schlumberger's history of M&A. Back in the days when owning the whole vertical stack was really important, and Schlumberger went all the way to actually buying Fairchild Semiconductor in California, one of the original semiconductor chip manufacturers, believing they needed to control even the chips that were going into their sondes that we were using to do oil field measurements with. And so that was super fascinating to also understand the challenges of culture and how an oil field services company trying to run high tech is, so it was all the different things you were kind of learning from people like Manfred Ketz de Vries, actually seeing it to practice.
I remember him well.
Yes. It's kind of opened my mind to thinking of a whole new different career path, and resigned from Schlumberger at the end of INSEAD and went to join Hewlett-Packard, I was really impressed by back in the day, they were one of the original garage startups in the Valley and had become a real icon of innovation and management by walking around, great style. And so I was based in Grenoble, France, and running around the world as we were building networks. So that was, again, very sort of corporate-y kind of mindset, going from, Schlumberger at the time was the 3rd highest market cap company in the New York Stock Exchange when I invested in it. Then HP was a Fortune 100 company. And it was actually during my days at HP, I discovered the wonders of entrepreneurship and how resourceful founders with relatively little capital could be incredibly resourceful. And we ended up OEMing a product from a company on Route 128, just outside of Boston, that had done exactly that. They'd really outgunned what I thought was the most amazing machine, Hewlett-Packard. And so it was a real eye-opener to me. A year or two later, my journeys back and forth between France and Montreal. I then met another amazing entrepreneur. At the time, we were starting to build just across the corridor from where I was working in networks, the first digital GSM components for cellular. And for me, it was another protocol, another technology until I met an amazing founder called Charles Sirois, who had this vision for the world of wireless and how cutting the cord was going to democratize communications around the world. And I was about to actually move to HP headquarters, but did a big detour. It was one of those massive forks in the road career-wise, and moved to Montreal. But because he had most recently been the president and CEO of Bell Canada, and he wanted to be more of an entrepreneur, he had a non-compete. So while being based in Montreal, I was running around the world in what was a bit of a gold rush in those days, as we went from monopoly, fixed telecoms to competitive wireless. And there were typically consortia made up of local players, and typically either European or North American people who were slightly ahead of the curve in terms of deploying these networks. And so you created these consortiums and win licenses and then build out networks. So that's what I did for 6 years. And then a sister company, and this is a long story to get into venture capital, a sister company back in Canada, in winning its license, had committed to a lot of innovation, including creating a venture capital firm. It was called AgeTech Capital. The CEO asked me, having launched the network, having launched their brand, the Fido brand, if we could actually get and fulfill the licensing obligations and get the venture capital fund up and running. And from my perspective, it was a wonderful idea because we were still a 100% voice industry. You can imagine what it's become today. The carriers were still the pivotal component in the value chain. And so what we did was turn Microcell's intention to have a venture capital fund and create actually a global fund and get other carriers, including France Telecom, Deutsche Telekom, Singapore Telecom. We had 3 carriers from every continent, and they were really pivotal in providing some of the core capital, but also most importantly, the insight and the perspective of what was coming down the pipe and the issues and challenges of deploying new technology in their networks, given that they were, unlike today, they were really the gatekeeper. Everything has flipped massively, as you know, with the Apple and Google's entry into that market. So that was my opening into venture capital. I knew the world of wireless, actually hired somebody who'd been a seasoned veteran of the venture capital world from Boston, and then opened offices in London and Hong Kong, and later in Stockholm and Helsinki, which were also hubs of innovation wireless back in the day. I did that for many years again, based in Montreal, basically on weekends and holidays. My record, I think, was 22 times across the Atlantic to London for board meetings and stuff. Anyway, we then had a massive downturn. I think we always thought there was going to be a blow up in the bubble in the end of the 90s and early 2000s. But we also thought wireless was something real, unlike a lot of the excitement of the internet. They got way ahead of itself. But it was an indiscriminate bursting of that balloon. And we hunkered down. There was a bit of a blow up in our firm. Several of the partners went off and created a new activity, basically with the same thesis. But rather than having, because we ended up with almost 500 million under management across 2 funds. We also had the wireless internet fund that was launched in 99. But being much more involved, almost like a studio model, where we would be intimately involved with the founders doing typically 2 deals a year and almost co-creating the companies and getting them up and running. And had a few exciting successes there, including taking a company public 6 years later on the New York Stock Exchange on the day of my 50th birthday, which was super exciting, ringing the bell. But it also at that time frame was starting to think, what have I done for Montreal, my sort of adopted home, and where my kids had grown up, and where we had a latent emerging sort of tech ecosystem, not a great venture capital community. And it was still a little bit of a sort of thing that happened underground, and you had to be kind of geeky to know when the meetups were happening. And we'd also had this wave of Web 2.0 innovation, which really allowed you to do a lot more building on the shoulders of giants and the internet and everything that was going on in mobile, and get a startup up and running much quickly. There was a whole new methodology called the lean startup.
Yep.
And so this was it was almost the start of a bit of a tsunami of entrepreneurship around the world. But Montreal, I felt we were lagging. And so with an acquaintance who'd moved back from Hong Kong, we ended up thinking, how could we get this going? We had created a little pilot fund on the island of Montreal and also doubled down on the ecosystem, creating a not-for-profit with the first sort of go-to hub for entrepreneurs in Montreal. And so that eventually became an entity called Real Ventures. And that was my sort of 3rd wave of really building the most active seed stage venture fund in Canada. And I've done that for the last 15 years. In the course of that, we were industry agnostic, but we were riding, again, waves of technology. And our most recent fund, 2017, was very AI focused because, as you know, Montreal and Toronto and Edmonton were real hotbeds of deep learning. And two particular pioneers, Yoshua Bengio in Montreal and Jeff Hinton, who, as you know, just won the Nobel Prize last week, were pioneers. And against a lot of naysayers, they kept at it. And the breakthrough started coming. And we actually made a few investments with Yoshua in the sort of 2014, 2015 timeframes. It was the start of that whole wave of what we've now just been this incredible, explosion of innovation around artificial intelligence. And so that was our last fund. It was all focused across industries, but I was particularly the sort of health focused. We also supported a global movement called the Hacking Health, which brought together entrepreneurs with clinicians and doctors to think about what are the gaps. And then it was like a weekend startup event. They would actually create products and services, and sometimes they would get funded, sometimes get supported. But it was a really great way of bringing the different constituent parts to make successful startups. We also launched a thing called the Hacking Health Accelerator to actually give them some funding backing. And all that to say that I was kind of a little bit more health focused, although it's such a deep domain. And laterally, also thinking even deeper, my mom in her last 11 years suffered from Alzheimer's. So given the combination of thinking about a cognitive decline and how that impacts the elder generation.
You couldn't help but connect those dots.
Yes, and how neuroscience was also an amazing strength in Montreal. We have the Montreal Neuro that was founded back in the mid-30s to really think about a deeper appreciation of the brain. But when you think about what AI could now do in terms of uncovering the secrets of almost one of the biggest data sets that's kind of hidden within us, whether it's in our brain or our nervous system, I was starting to think, we did some investments, but also thinking, how could we combine those in terms of a platform? Again, this is a long-winded story to tell you about how AgeTech Capital came into being. But in the course of all these joining dots, I was asked by two entities, AgeWell, which is part of the University of Toronto, and MedTech in Montreal, which is a not-for-profit that's about bringing industry together with government granting agencies to push technology out of labs and into different settings, in this case, care settings, and improving the well-being and the quality of life of elders. And this was just sort of pre-COVID, coming into COVID. They were about to get a $50 million government grant in Canada to really expand their activities. And I was helping them thinking about bringing my sort of lessons of how do you get startups up and running and scaled. And so that sort of opened my eyes to beyond cognitive decline issues of just the whole demography wave, this largest segment of society, something you kind of know, but when you start to really dig into the numbers, we also were living COVID, thinking through who was suffering the most, appreciating in my world of entrepreneurs and founders how little had actually been done to innovate in this space. Just joining all of these things together, just, oh my gosh, there's something big to be done here. And it was kind of, as we investigated this, is there a need for a dedicated AgeTech Capital fund that can really find great founders, have an ecosystem of support around them to create value, both for them, for the investors, and for the community at large, and particularly for elders who we came to conclude, and I think we'd all agree, have been massively underserved by innovation, and yet they could really enhance the quality of life going forward if we can bring this to bear.
So you're kind of on the front lines of advancement in all of these interrelated fields, neuroscience, AI, tech, etc. Give us some examples of what you see that excites you and how they're going to contribute to aging better and improving longevity and answering this massive demographic shift that is now embedded in your conscience.
Yes, actually, through our sort of network and community building in the tech world, we were part of an entity called Google for Entrepreneurs, which brought together hubs from all over the world. And I actually met Stephen Johnson probably 8-9 years ago, and he co-founded something called Aging 2.0. So people have been thinking about this for quite a while. And actually, Stephen was one of the first people I reached out to just say, what is the sort of state of the art? What's happening in the industry? Where are we in the curve? There's often a bit of a hype cycle in tech, but this was one that he said, no, this is a challenging one. We have an embedded ageist bias. It's one of the last biases that, even the World Health Organization published a huge paper about this a few years ago. It's something else we have self-directed. So there was an appreciation that, well, what's going on? But to tell you that we have in the course of the last 2 years, about 1,200 startups in our CRM now. And it's super exciting to see both the quality of the entrepreneurs, the ideas, and things actually starting to get traction. The way we've kind of distilled this down, because there's described as grand challenges, I really like to flip that on its head as, maybe it's just a sort of optimist, the way that we kind of view the world, but we're always thinking, well, these challenges are actually opportunities. How do you both flip the narrative on aging and ageism, but also how do you take these challenges and actually turn them into something that you're creating affordable, accessible solutions and services for this population, where technology is an enabling element. It's not the be all and end all. It's often wrapped in with a high touch human component. We're also very much thinking about humane tech, but specific examples in our 4 verticals. The first is everything to do with connected living and independent living. Most older adults would like to stay in their homes for as long as possible, but typically their houses are not configured for such. The second big one, is quite interrelated, is everything around sort of caregiving 2.0, as we call it. We have this pyramid that's becoming a square, and it's described as a care burden, but I actually think we should not be thinking about it as a care burden.
Thinking of it. The vocabulary is unbelievably important.
There's so many interesting opportunities in that area. Something I've also discovered about identity discrepancy. Again, I think because of this sort of attitude to aging, when we are in a position of having to care for somebody who we've loved, where we're also holding down a job, it's typically 65% females, daughters and daughters-in-laws. And there's this challenge of, oh my gosh, it's maybe my mom. I kind of had this myself, and now I'm caring for my mom, where, that the role reversals. So it creates all these different psychological challenges. And there's an awful lot to do to support that, to allow people to be more effective in how they care, in understanding and bringing the community, both, the family and circle of friends care with the professional, to make that a much more efficient process where you can actually either earn a living doing it appropriately and efficiently, or you can hold down your job and still not be stressed by all the obligations of actually caregiving. So there's an awful lot of technology in that area. The third vertical is everything to do with preventative health and really empowering the individual to have more vitality.
Yep.
Fourth vertical is everything around financial security, financial well-being. If we're going to live an extra 30 years, there is, a big section of this boomer segment of society that's the richest ever, but that wealth is massively unevenly distributed, and the vast majority of people, definitely in North America, are going to struggle unless things change. And so looking for solutions, rethinking retirement, unretirement, thinking about home equity. People are often their equity, they've got a lot of value in their house, but they've got a lack of current income. So specific projects in there, just to highlight 2 that we've already invested in, which I think give a flavor for what we're doing. One is called Lifestyle RX, a Vancouver-based startup, which is addressing type 2 diabetes reversal. And if you think about, the health situation globally, how prevalent diabetes has become, weight issues, and not just that, but it is typically one of the first chronic diseases that then leads to multi-comorbidities. I thought it was had all the things that we were looking for in terms of amazing founding team who'd actually been in the domain for a long time. Dr. Brian is the founder there, is practicing medicine, who already had a startup. He built an electronic medical record company, which was acquired by TELUS Health in Canada. He helped roll up that sector and became the chief innovation officer before wanting to go back to practice again. And then pre-COVID, he was getting into relatively high touch behavioral change clinics on the West Coast and having great success, and identified, all the different modalities and protocols that you would need to bring, and having success in person meetings to actually reverse diabetes. And then COVID hit, and that really sort of forced the thinking and accelerated, how do we actually deliver this virtually? And so Lifestyle RX is a 12-week program that really leverages the physician's time, creates a circle of care and a whole protocol to reverse type 2 diabetes with a so far 46% remission rate, helping people reduce weight, helping people reduce their drug reliance, and scaling across Canada now into North America. And one of the great other aspects of that story is
fascinating.
He actually mentored the other 2 co-founders while they were at Princeton. They also built their own electronic medical health record while getting their degree. And so he mentored them, and then they sold that company, and then all came together to launch Lifestyle RX. So it's really about behavioral change and thinking, take control of your health for a longer, better living. In a completely different vein, we invested in a company called Bloom Finance, which is all about that home equity release in an industry that's had a bit of a stigma, that had a lot of sort of sharky operators.
Yeah.
They have done this in a very ethical, client-friendly way where there's no chance of getting into a negative mortgage situation, where they've also innovated coming with a debit card to really allow you to have a little bit of income augmentation for things that are important to you through the next 15, 20 years of your life.
Okay.
I could give you
very compelling, both of those, and nicely balanced.
Yeah, another 5 we're kind of looking at. If I give you more examples.
That's okay. We got more to cover. So perhaps it would be interesting to add into our show notes a list of some of your favorites that we can then invite people to take a look at. I'm curious, there's 1,200 startups in your CRM. How big is this market today? What are we talking? I mean, I'm seeing all these trillions of estimates going around. I'm sure you've taken a better look at this than I. What does it look like today, and what's your prediction for where we're headed?
It's characterized in different ways, and like in any analysis, how you cut and divide and look at these things, it's, the numbers are somewhat all over the map. But when you think about the longevity economy in North America, and the AARP is the biggest NGO serving, 34 million members in the US, has got probably the best stats on this. They estimated it was an 8.3 trillion contributor to the US economy in 2018. And this is everybody who's over 50. And it's going to triple to 26.8 trillion by 2050.
And that's just the US.
It's just the US. So when you think about, that's all the needs that exist, but I think also all the new markets that are going to open as a consequence of boomers who have been very disruptive in sort of every aspect of society that they have lived through. And now that they are definitely the latter wave, have been sandwich generation, and think there must be a better way to take care of their parents, or to make sure that their children don't have the same issues and challenges looking after them. So, pickleball is one thing that we love to sort of think about as a kind of example that did not exist, that it was the boomers who really drove it, and it's grown like wildfire. And it's kind of a mishmash and a hash of existing fun formats, but created in a modality that's really effective and community driven. And so when you think about that across all vectors of living, work, and play, there's not only going to be a drive in existing markets, but there's all these new markets that are going to emerge as a consequence of that. And globally, the 60 plus population is going to double to 2.1 billion by 2050. And again, it's complex because we typically, unfortunately, put everybody into a sort of frail basket, and it's not at all the case. But it's also one of the challenges.
Less and less, we hope.
Yes, but it's also one of the challenges. You really need to kind of understand the market, think how do you reach them, the channels of distribution. It's a key thing, obviously, you want to understand when you're looking to invest in companies as to how they're going to access and reach that market in a cost-effective manner with the positive, both financial, sustainable, and social impact outcomes.
So that's a good transition to something we talked about a little bit, is the challenge of the anti-aging mindset and what you referred to earlier as self-directed ageism. I know you've talked about that, you've experienced some of it yourself. Can you share a little bit, how do we shift that cultural perception to embrace a more positive, or do you think it's just going to, with the numbers, when we get to the 2nd billion, it would just be such a big part of the world that they will come to normalize and celebrate this age issue?
I think part of it is there's a weight in numbers, and we've kind of had this 40 is the new 60, whatever that number is. So I think you're obviously more attuned to it as you grow older. I'm I'm north of 60. I just don't feel like that at all. So I think it is a very individual journey, undoubtedly. But I do think I have had the privilege of, being so stimulated by typically much younger entrepreneurs for the last, 25 years. I don't tune out of my age. But one of the wonderful things I think that we really need to find a way to embrace more is the intergenerational reciprocal learning. Because we created a mentor-driven program for founders called Founder Fuel, which was typically older mentors coaching older seasoned executives and been there, done that entrepreneurs with youngers. And some of the mentors would think, they were going to be God's gift to these young startups, but there's this wonderful mutual learning that goes on. And I think that's the magic that we need to find across so many different domains. That's kind of then breaks down you appreciate for people in all their colors and dimensions and, attributes rather than the sort of siloed or, biased thinking. And that's as much for younger, looking up to older looking down on younger, and us thinking about what we're still good for. One of the ways we sort of first crossed paths, Avivah, which I think is kind of staggering, is everything to do with retirement and the sort of binary nature of that, which I feel we have to have a massive rethink of that for so many reasons. One of our partners, thanks to one of my partners, Bruce Simpson, was at McKinsey for all of his career, and we still have very strong ties with the McKinsey Health Institute. Yep. And they have done massive global surveys that really resonate with the fact that not working in some shape or form is a big issue for your purpose, your meaning, your ability to contribute, to participate. It doesn't have to be, the full-time work, of course. Yep. There's so many different ways, and volunteering can be a huge part of that. But just this notion that, you hit 60, as in McKinsey, and you have to retire, or 65, whatever the number is, wherever you are in the world, it doesn't make sense to me. It's not good for either our young people to kind of lose out on that wisdom. It's not good for our generation not to be contributing to the world, and whether it's economically or socially or impactfully. I also think breaking down that will be another way because there's this, back to the sort of caregiving burden, there's this assumption that younger helps older, and I actually think there's much more reciprocal
benefit. What do you answer to the people who say, in any case, AI is going to destroy 80% of our jobs, and we're not going to need all these workers? And then how are we going to we got to give these jobs to the younger generation rather than keeping the old folk in employment?
There's definitely a bit of that which is concerning. My perspective is much more, and it's maybe again through the lens which I look at things. I'm looking at the augmentation of either enhancing our ability to do our jobs, to spot gaps that we would not have otherwise been able to dealt with just because of the volume of information that gets thrown at us. So I actually think it's going to completely revolutionize how we use our time and actually give us more power over that. I think this is the speed at which this is evolving, the challenges in just staying apace with everything. We're also in a kind of a bit of a phase where the anticipation of what this is ahead of what it actually can deliver. But I do think we'll get to a point where it will serve us well over time, and particularly for the aging community in terms of simplifying access, having more natural ways of how we interact through the amazing sensor capabilities and the ability to actually appreciate what we're saying, doing, how we're moving. So I'm actually quite, I think an informed optimist. But it will be a bit of a roller coaster ride, and it's again something to stay abreast of and to stay on top of, and to your philosophy of humanity as to how this plays out. Because we do get pulled to the sort of horrible scare stories, but I do think there's an awful lot of very positive stuff with regard to the humane tech sort of imposition and frameworks as guidelines to ensure that this does get deployed, ethically and to the benefit of humanity and society.
Okay, we will check back in a decade. You're working, I don't want you to go without talking about the partnership that you're working on with AARP in the US that you were speaking about earlier to create an investor platform. This sounds very exciting. Can you share about this collaboration and what it aims to do to drive really systemic innovation on aging?
Yes, the AARP, as I mentioned briefly, is this amazing NGO in the US that's been around for a very long time, but they also been incredibly innovative in addition to what they do to support their members, to advocate on Capitol Hill on their behalf. They created an innovation lab over 5 years ago, and then they built a collaborative understanding that, this wave of aging is affecting all segments of society, all industries, all aspects of business. And so they now have over 500 members, from startups to universities to test beds to the major players from United Health Group, CVS, the biggest pharmacy in the US, to Fidelity in financial services, Best Buy in retail, Verizon. So it's an amazing melting pot for people to exchange ideas, to see what's going on in innovation, to explain needs in the market. And we joined that early on because it was a visionary thing. And it's something I hope to bring to Canada through what AgeWell and MedTech are doing with Envisage here. But it's also, they have invested in almost 80 startups themselves. And in our discussions, we start to realize there's a gap for the companies where they've provided that initial seed funding. And in the whole market of age tech, I would say relative to the size and scale of the opportunity, whether it's the demographics, the numbers that we were citing early, there is not enough investment in the space for all the ageist and other reasons. But it's changing dramatically. And so we're looking to fill the gaps. We, with AgeTech Capital, will fill one for growth stage companies in Series A, Series B, but there's a gap between what AARP is doing and what we're doing. So we basically created, inspired by things like AngelList, to create our own investor network where the best of the AgeTech Collaborative companies can come through, can be exposed to accredited investors, and really create a nexus of exchange information to shine the light on what is the sector. To your questions, what are the different segments? What are the opportunities? And like anything, I think people invest to make money, of course, because they're also, thinking about their future, retirement, whatever the reasons. But there's also people like to understand and appreciate and have some resonance with the domain and, those opportunities. And this one is particularly meaningful when you talk about age tech, because when we get into these discussions and we're maybe pitching our fund, everybody has their story of, is there a solution for this? Is there a service for that? And so that's what we're doing here. And I think it's going to be a very exciting. It was launched within the Collaborative a few weeks ago, but the big announcement will be made at CES in January.
Okay, and we'll put links to all of those things in the show notes so that in January we can all tune in to the next, to that launch officially. So, okay, you've taken us on a wild and crazy ride in one of the biggest demographic shifts of our time, this huge multi-trillion-dollar market opening up. Give us your best description of the next decade in age tech. What can we expect? What should we be watchful for? What can we hope for?
Huge question in that startups is, it's typically a 5 to 7 year kind of journey.
Yep.
And I suppose before even entering the market, that's what we were initially doing, was really calibrating where are we. This has been probably an emerging market for 10 years. And I really do think that part of it, just because economics tends to attract, and demographics don't lie, is attracting a lot of innovation. But also I think COVID almost did, maybe one of the silver linings was shining the light on just how much, the aging segment of society was disproportionately and negatively affected by this. So I really feel we are, we typically talk about the curve and the hockey stick, and we are definitely on that growth curve now. So both the companies that have been, maybe started 5 years ago that are now starting to hit critical mass, particularly in caregiving, and really figuring out ways to improve the fluidity of that market, to get people to be more efficient as individuals and as caregivers. So those markets, I think, are quite ripe already. With regard to, refitting houses, there are literally hundreds and hundreds of different disparate sensor technologies. It's going to take a little bit longer for those to start to be, I think, packaged as not just a one little point solution, but something that really works and can be deployed. When you think about, definitely in North America, Best Buy and the Geek Squad, it's a little bit like in the early days of the internet where it was all a bit, we've moved from the hacker kind of wave, but it's still a little bit complicated to tie these things together. I think in the next 3 to 5 years, the telcos and major retail outlets will offer you kind of super simple packages that will be easy to deploy to really allow you to live longer in your home. We have seen, again, like in every technology wave, you're kind of building on the shoulders of giants. And when you think about preventative health, which is probably one of the biggest things where there's already a lot of interest. People with wearables has suddenly turned out into something a little bit more tangible and easy to monitor and evolve with. when you also start layering on all the AI and personalization capabilities to actually make that even more meaningful, I think we are on the cusp of that again, 3 to 5 years. I think one of the longer timeframes is probably in financial security and services. Just, I think the conservatism of that industry, and it definitely takes, it's quite a lot of capital for startups to really build critical mass to win the trust of consumers and clients. So it's probably more like a 5 to 7 year kind of time frame, I think, for those to become more mainstream.
I'm struck by, in your, short 6 decades, Alan, how many mega innovative eras you have traveled through. That is quite a life, quite a story, and quite a series.
It is. What's amazing is how they just keep kind of layering on top, the internet, then mobile, and then it became the mobile internet. Most people are accessing the internet through, wireless devices these days. And now AI, it's just kind of embedded. It was relatively avant-garde in the mid 2010s.
Yep.
Now it's, we're all, even if we don't know it, it's kind of embedded and it's prompting us to do all kinds of things all the time.
And now Age. Congratulations. It will keep you young, I think, to keep focusing on the next cool thing, of which aging is just the last. Or the
Absolutely.
next, I should say. Who knows what's after that? Alan, I want to thank you for sharing your energy, your vision, and, for spreading some of that money around in just the right places where we need it.
Well, Avivah, I think you are, this sort of sector needs sort of evangelism, and we live in a very anti-aging culture. We're youth obsessed, but there's magic to aging, and it's happening to us all. So I really believe we need to embrace it. But I think everything that you do, and I've really enjoyed, your podcasts, your writings, and just the work you do with INSEAD as well is fantastic. So
Thank you so much to our best efforts going forward for the second billion. We'll be back, as I say, in 10 years to check some of these predictions. Thanks so much for your time. For more thinking about the impact of our 4-quarter lives, you can read my column at Forbes and subscribe to my Elderberries newsletter on Substack. Let's design lives that aren't just longer, but better.